What is budget deficit? A budget deficit occurs when the government's spending exceeds its revenue in a given fiscal year. When this happens, the government has to borrow money in order to cover the shortfall. This borrowing adds to the national debt, which is the total amount of money that the government owes to its creditors. There are a few main factors that contribute to a budget deficit. One of the biggest factors is a decrease in tax revenue. This can happen when the economy is not performing well, causing businesses and individuals to earn less income. As a result, the government collects less in taxes. Another factor is an increase
in government spending.
This can occur for a variety of reasons, such as increased costs for programs like healthcare or defense, or the need for additional funding for things like disaster relief. It's important to note that a budget deficit is not necessarily a bad thing in the short term. In fact, during times of economic downturn, many economists argue that government spending can help stimulate the economy and create jobs. However, persistent and large budget deficits can lead to long-term problems, such as inflation and high interest rates. To address a budget deficit, the government has a few options. It can increase taxes to boost revenue, cut spending in certain areas, or a combination of both. However, these decisions can be politically contentious and may not be popular with the public. In conclusion, a budget deficit occurs when the government spends more money than it brings in. While it can serve as a short-term economic stimulus, long-term and large budget deficits can lead to serious economic challenges. It is important for the government to carefully manage its finances in order to ensure the overall health of the economy.